10-year yield just hit the 99th percentile, and the 10-year at this level reprices every leveraged asset in the economy. Something is breaking beneath the surface, and the data confirms it. Right now, 10-year yield is at 4.59%, the 99th percentile for the past year. Historically, the 10-year at this level reprices every leveraged asset in the economy, says the data needs to confirm. The commodity analyst says we are in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. The commodity analyst is right, and the data keeps proving it. Oil at $103.5. 150-day streak. Gammon just moved from wrong to right. Score 1 for Gammon. Credit will blow out. Investment grade spread agrees at 75 basis points. McElroy might be right, but the data has not confirmed the thesis yet. 149-day streak. Hartman might be right, but the data has not confirmed the thesis yet. 143-day streak. The dollar analyst might be right, but the data has not confirmed the thesis yet. Snyder's call is not working, for now. Yield curve moving against the bearish thesis, up 8%. 4 days running, the volatility expert just moved from right to wrong. The volatility expert's call is not working, for now. VIX moving against the bearish thesis, up 6.8%. Score today, 2 right, 3 early, 2 wrong. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. Today's big question, are commodities in a supercycle? Or is this the top? On one side says the data needs to confirm. That is the setup. Everyone hears on the podcast, it sounds convincing. On the other side, the commodity analyst says we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Here's what the data says. Oil at $103.5, 96th percentile, down 4.8% today. Gold at $4,537, 67th percentile, down 0.3% today. Copper at $6.23, 96th percentile, down 0.6% today. Bottom line, the data is split. Neither side has a clear edge, which means the resolution is coming soon. If oil drops below $80, the supercycle call is in trouble. Right now, it is at $103.5. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $103.5 is in the 96th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,537. We'll track it daily on the scoreboard. None of the 7 are talking about this next signal, and they should be. 10-year yield just surged 2.7% to 4.59%. That's the 99th percentile, extreme territory. Historically, the 10-year at this level reprices every leveraged asset in the economy. None of the 7 are talking about this. Keep it on your radar. 2-year yield just surged 2.2% to 4.09%. A move this size demands attention. Historically, the 2-year at this level reflects where the market thinks the Fed goes next. And here's another signal flying under the radar that deserves your attention. Phase 1 is the good times, but good times do not last forever. Here's how close we are to the edge. We are 75 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment-grade spread crossing 150 basis points, currently at 75 basis points. Pace is flat or improving. No urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has yield curve, initial jobless claims flashing red. Gammon says, the Fed is breaking things and credit spreads will blow out. The data agrees with that assessment. Phase 1 holds with 75 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here's what the ZIP level data is screaming about today. MI, days on market is spiking in Warren. Days on market and Warren moved plus 100% in 30 days, now 147 days. Buyer leverage score, 5100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. AR, Days on market is collapsing in Harrison. Days on market in Harrison moved 99% in 30 days, now 107 days. Buyer leverage score 46/100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. Riverside, CA, payment burden is past the breaking point. Temecula, CA, median home about $1,490,000 on about $77,000 household income. Price to income ratio 19.3. When the math stops working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle, or is this the top? Let me show you what happened the last time we were here. Copper at $6.23 is in the 96th percentile. That means it is higher than 96 out of 100 days in the past year. In 2022, copper dropped 35% on China lockdowns and global recession fears. In 2020, copper crashed in March, then doubled over the next year on stimulus demand. In 2011, copper peaked above 4.60, then gave back 30% as China growth slowed. Different environments, different catalysts. But every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, oil at $103.5 is in the 96th percentile. The last time both copper and oil were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. History does not pick a winner here, but it does say the resolution is coming soon. Be positioned before it arrives. Here is what the data says to do right now. Stay alert on VIX. It is surging 6.8% today. Fast moves demand attention. Avoid Phoenix at 41% payment burden. That is stretched territory. Watch 10-year yield. It surged 2.7% and nobody is talking about it. Every signal is live at analyze.builderslens.com. The podcasters give you the thesis. We give you the scoreboard. Subscribe and I will see you tomorrow morning.